Good day everyone, and welcome to another webinar by Devonshire Accountants. This one is on the Jobkeeper payment update. My name is Raj Rana and I'm the Managing Director here at Devonshire Accountants. I've been involved in this firm since 2009, and prior to this had various accounting positions around the world, especially in Kenya, the United Kingdom and Australia. My experiences range in a variety of fields including insurance, banking, top retail brands, beverages, hospitality and many more industries. Before we begin, a very big thank you to everyone who has subscribed to our channel and supported us on our YouTube journey. Please keep subscribing so we can update you on the government stimulus packages and on the upcoming tax season. So stay tuned. Our early webinar on Jobkeeper, which we released on the 1st of April 2020 and an update later on the 5th of April 2020. Do please have a listen to those as well because they have quite a bit of information. Moving on, firstly, the good news is that the Jobkeeper payment passed through both houses of Parliament on 8th April 2020 and received royal assent on the 9th of April 2020. So in this webinar, we'll highlight the changes which we have been waiting from the ATO received on the 14th of March 2020. So a quick summary on the Jobkeeper payment, which we're going to discuss further. So I'll start off with especially looking at who an eligible employer is. Now basically this is based on turnover. So as mentioned in the earlier webinars, so if aggregate turnover is under $1 billion or less, the projected GST turnover should have fallen by 30% or more to qualify. The second point was that if the aggregate turnover is over $1 billion or more, the projected GST turnover should have fallen by 50% or more. The third one was that the employee should not be subject to any major bank levy. And what they've added on is for charities that are registered with the Australian Charities and Non-for-Profit Commission, which in short is ACNC, the turnover should have fallen or likely to fall by 15%. So if obviously businesses fall into those three categories, then that's an eligible employer. And this is basically based on turnover. So let's move forward and revisit the turnover test. Now, with updates from ATO, we have now more information on the turnover test. Initially on our webinar, we spoke about the initial one, which was the basic test, but now the new update is with the alternate test. But I'll touch base on the basic turnover test first. So under this testing, the turnover is calculated as per the business activity statement. So either you report on a cash basis or an accrual basis, the turnover will be as per the BAS. And it's going to be compared to a relative period 12 months prior. If the BAS is done monthly, then we will need to compare, for example, April 2020 turnover to April 2019 turnover. For quarterly BAS, we will need to compare the same quarter in 2019, for example, June 2020 to June 2019. And under this basic test, a business can also start claiming for the Jobkeeper for a future period as well. However, no back payments will be allowed. This means where businesses don't meet the turnover test as at 30th March, but can receive the Jobkeeper payment once the decline in turnover test has been met. So they could meet the turnover test not in April, maybe in the following month. Then payments will then be made up to the 27th of September 2020. However, they will not be backdated to 30th June. So that's an important point as well. And the new one, the new information we had on the alternate test. So as per my previous webinar, I did mention that the Commissioner of Taxation, Chris Jordan, had received discretion to consider businesses that do not meet the core requirements in terms of turnover. So what we know now is that the Commissioner has the discretion to set out alternative tests that would establish eligibility in specific circumstances. So there will be some tolerance, we think, where employers have, in good faith, and I repeat, in good faith, estimated at least 30 or 50%, whichever the case may be, the fall in turnover, but actually experience a smaller fall. So we think that obviously the Commissioner will have discretion and we think that there will be appropriate evidence that would be required. So there would be the ATO would be asking for some more details and requirements. And we think especially for new businesses that were not in operation 1 year ago, or the turnover earlier period was not representative of their usual average turnover, the Commissioner will have discretion to consider additional information. So this opens up quite a few room for other businesses. So the two tests, so the basic test and the alternative test, will be used to see the qualification. But at this stage, we are still awaiting a lot of details from the ATO on those, but basically that's the information we have received. Now, looking at the decline in turnover test, we need to remember a couple of key points in the decline in turnover test. So I think the first one is that you need to meet the test before you're eligible. So the requirements I mentioned in the decline of should be met to show that you're eligible. Once you meet the test, there's no need to retest later. So once we have met the requirements of the decline in the turnover, then we don't need to the ATO will not retest it at a later date. The basic test will be based on your BAS compared to the same period last year, same month or quarter, as mentioned earlier. Applying the month, you reasonably expect a turnover fall. So what this means is that businesses are encouraged to apply for the Jobkeeper in that month where they expect a fall in turnover. So maybe businesses might not have a fall in April, so they could hold off and see what their turnover expectation is in May and then apply in May. So that's where that comes in. The fundamental component is that the employer must have paid before they receive the payment. So staff should have been paid, the employees should have been paid their wages before the employer receives the Jobkeeper payment, because this is going to be in arrears. So it's important that you note that you need to keep paying your employees on a regular basis, if it's basically mainly fortnightly. And a key caution point here is also that, which I need to bring to your attention, is that some hefty fines will apply where entities engage in fraud, including jail and up to 75% financial penalty. So the ATO are quite strict on this, and they obviously, as I mentioned, that you have to provide information in good faith. So moving on, there's been a lot of questions again on eligible employees. So earlier on I spoke about eligible employers, and a lot of questions on that have come up. So I'll revisit this area, just clearing a few points. And these requirements are as per our previous webinar. So first of all, basically the employee should be currently employed. This includes employees who have been stood down or rehired after they lost their jobs. Employee was employed as the 1st of March 2020. So that's a key date. So the employee should have been working for you as at that date. So employees should have been in full-time or part-time employment, or it's a long-term casual. So for casuals, you have to be employed on a regular basis for longer than 12 months. So that's the key requirement under being a casual. And employees must be at least 16 years of age. The employee is at 1st March 2020 is either a resident of Australia for social security purposes, which means that they're an Australian citizen, or a permanent resident, or a holder of a protected special category visa, or resident for Australian tax purposes and was a holder of subclass 444. So resident for Australian for tax purposes and a holder of subclass 444. So those are key points there for residency tests, and these have been explained a bit more clearly now by the ATO. The next point is that the employee has not been given any other employer nomination notice. So as mentioned earlier, that you can be working for multiple employers. However, your Jobkeeper payment can only be claimed by one. So when you're looking at the requirements for eligible employee, it's important to note that your nomination notice is from the one employer. And for long-term casual employees, they should not be a permanent employee of another employer. And lastly, the employee should not be in receipt of government-funded parental leave pay or dad and partner pay, and nor are they fully supported by the workers' compensation scheme. So those are a bit key points on eligible employee. Now, moving on further informations and updates we've received from the ATO is on the process. So the process for lodging consists of a number of steps, and we here at Devonshire Accountants are assisting you, our clients, in getting this right. We are here to help you make sure that we get it right. The process involves quite a key number of steps, and obviously, as mentioned before, that we are here to guide you through. So I'll just mention a few of the steps, the process steps for businesses which have a turnover of 1 billion or less in this webinar. So obviously the first point is that the determining the turnover test, considering the entity's aggregate turnover, whichever is applicable. Is it 15%, 30%, or 50%? So we'll have to determine that in the first instance. The aggregate turnover in this case is the same as determining the small business entity, which is the annual turnover that is connected with the entity, excluding dealings between the entity and its connected entities and affiliates. So where there's a group of companies, we'll be looking at the aggregate turnover of that particular entity rather than the group. Then we have to determine the decline in turnover. So in determining whether the business turnover has fallen, the business would generally need to show a decline in the projected GST turnover in that current period, either in a month or a quarter corresponding period in 2019 income year. The next point is we have to check if the employees meet the eligibility requirements, determining the eligible employee criteria, which I just spoke about. We'll also have to check, and employers have to make sure that they continue to pay at least $1,500 to each eligible employee, and the first fortnight period is 30th March 2020 to 12th April 2020. So I must stress that you make sure that the payments are made and received by the end of 2020. If you haven't paid the last fortnight, you can still make a payment by 30th April. This is the one-off which a leeway we have. So just make sure that you keep paying your employees the $1,500, and if you haven't paid them for up to the 12th of April, please do that as well, so that you're up to date by the end of the month, 30th April. The second fortnight starts from the 13th of April to the 27th of April 2020. So keep those dates in mind. The other point in the process is that you must notify all the employees that you're intending to claim the Jobkeeper payment on their behalf. As per my first webinar on Jobkeeper payment, I did mention that multiple employees cannot claim. Only one employer can lodge the claim. So this is very important. And the employees need to be sent the Jobkeeper nomination notice. We here at Devonshire Accountants are providing this to our clients as part of their lodgement. So please do request a form from us, and this form is very important. It's called the Jobkeeper nomination notice and has to be filled in. A copy given to your staff, a copy to us as your accountants, and one copy will be retained by yourself. So that's very key and very important. The next step on the process is the enrollment begins on 20th April 2020, and we have a short window as this ends on the 30th of April. So basically this enrollment period is for the April month reporting period. Part of the process will also be requiring your bank details. And then what happens at the last point is that the application to claim the Jobkeeper will then be effective from 4th May right up to the 31st of May 2020. So there's a bit of a process, and as mentioned, please do not stress. We are here, and we're here to help you. We're very much aware of the processes, and we're here to help you go through that smoothly as possible. Another important point, and we had a lot of questions about this last couple of days as well, is about other individuals that are eligible where an entity is carrying on a business with an ABN. So basically, in the case of partnerships, there's one partner who can claim. In the case of a trust, one beneficiary of the trust can claim that where the beneficiary receives distributions instead of being paid a salary and wages. A lot of trusts, as you know, family trusts, they don't pay themselves a salary and wage, and basically towards the end of the year there's a distribution done. So in that case, there's only one beneficiary who will be eligible. With companies, again, there'll be one director on an eligible business, or there's one shareholder of an eligible business that pays the shareholders that provide labor. So those were for important points for businesses which will be also entitled to this JobKeeper payment. I also wanted to touch base on some taxation points. I've just got a few here. So importantly, the JobKeeper payment is not subject to GST. A lot of people have been asking us that, once they receive the money, are they going to be charging GST on that or not? So JobKeeper payment is not subject to GST. The payment to your employee will be subject to the normal taxation rules, which is the PAYG. So the PAYG withholding tax has to be applied. And wages remain subject to superannuation guarantee. And I'll just do an example just later on. And obviously no backdating of payments. So it's quite important that these points are taken into account, especially it's a new payment and there's a lot of confusion. So I'll just give you a small example basically on the superannuation. I'll look at three scenarios here. So the first scenario is that an employee receives $2,000 gross before superannuation. So the gross pay is $2,500 and the PAYG withholding estimated is $540. So this person gets $960 as net pay. So now in this case, the superannuation will be on the full amount. So that means that on the gross amount, $2,500, the GST, the superannuation will have to be paid. In the second scenario, now we have an employee who receives $1,000 gross per fortnight. Now in this case, that person's gross pay will be $1,500 because of the new JobKeeper payment. And the tax which comes to the PAYG withholding is around $192. So the net pay they get is $1,308 into the bank. So now in this case, the confusion is, how do we pay the superannuation on the gross amount, or do we pay superannuation on the JobKeeper amount received? So this has now been cleared by the ATO. In this case, you will be paying on the normal wages. So the 9.5% superannuation guarantee will be paid on the $1,000. And on the third scenario, I have is an employee who stood down. In this case, the gross pay will be $1,500. That's a new JobKeeper. So the same PAYG withholding tax of $192, and net pay again is $1,308, as in the same scenario too. However, in this case, there will be no superannuation guarantee because the full pay is a job seeker payment. So I hope that clears that a bit on the three scenarios of how the superannuation is going to be working. As I mentioned earlier, this is a summary of the webinar on JobKeeper. There's a lot of details, and we are here to help. Please do contact us, and we will take you through the process as smoothly as possible. I hope this has been a useful webinar. Myself and my team at Devonshire Accountants are available to assist you. So please do not hesitate to call us. Lastly, please subscribe to our YouTube channel and don't forget to click the bell for future notifications. Our contact details are on screen as well, and we are here to assist you in the best possible way. Please also follow us on Facebook, Instagram, Twitter, and obviously YouTube. So thank you once again. Stay safe, work from home where possible, follow social distancing rules, and look after yourself and your family and people around us. God bless Australia.